Wall Street is lying straight to your face about Nvidia. And the worst part is you are celebrating your own trap, while YouTube gurus and media headlines scream that the company closed fiscal year 2026 with a historic net income of $120 billion. My lab's forensic algorithm just detected the major crack in the engine, a mathematical anomaly that hedge funds need you to ignore so they can exit at the top and leave you holding the bag. Let's look at the raw SEC data. Let's look at the hard coded data that the crowd is too lazy to open. In fiscal year 2024, Nvidia's net income was $29,760 million. By the end of 2025, that number skyrocketed to $72,880 million. On Wall Street charts, this looked like an absolute rocket, an explosive growth of 144.8%, the perfect hype to sell you overpriced shares. But here is where illusion shatters. In the recent close of fiscal year 2026, net income rose to $120,067 million. At first glance, $120 billion sounds colossal, right? But pull out your calculator. The actual growth this past year was 64.7%. Anyone who understands high finance knows exactly what this means. Nvidia's growth has decelerated by more than half in just 12 months. It dropped from 144% to 64%. Here is the uncomfortable truth that hurts the pride of superficial chart traders. For a company to sustain a multi-trillion-dollar valuation and absorb earnings multiple, it doesn't need stability. It needs constant acceleration. Maintaining the pace and dragging an additional $47 billion in a single year is a titanic effort that stretches accounting flexibility to its absolute limit. Physically, the market can no longer absorb more chips at the speed Wall Street demands to justify the stock price. What is going to happen when the crowd wakes up from this optimism, when the global market processes that the percentage growth is collapsing compared to the previous year? Expectations are going to crash head-on into mathematical reality. And on Wall Street, a collapse in expectations always translates into a single word: panic. Michael Burry didn't predict 2008 by looking at price trends on a screen. He did it by auditing the lines nobody else wanted to read. Berkshire Hathaway doesn't buy artificial intelligence narratives. They audit the sustainability of cash flows. This deceleration is just the first anomaly on the surface. On the balance sheet, there are two hidden lines regarding financial securities and derivatives that prove exactly what engineering they are using to doctor the final number before the close. But real auditors don't give away all the work in a short clip. If you want to see the full forensic breakdown of the 10K that the gurus don't dare to show you, the data is already running on the channel. This is Renzo Market Lab. Leave the guesswork to amateurs. We audit the numbers.